It's Wednesday, June 7th, 2023. A lot to talk about today. Please remember to like, subscribe, share this video. But let's get right into what's happening. I'm going to share some more articles with you today. This news came out within the last 24 hours, some of this even sooner. Mortgage demand drops despite rates coming off recent highs. 30-year fixed rate, according to this article on CNBC, is sitting at 6.81. I checked bankrate.com today. It was 7.02, I believe, a little bit over 7%. Mortgage applications to purchase a home fell 2% for the week and were 27% lower than a year ago. Refis fell 1% for the week, down 42% from the same week a year ago. Anyone in the mortgage industry right now must be getting absolutely obliterated. And it's going to get much worse, ladies and gentlemen. Now, there's a lot of talk that the Fed is going to pause next week. I don't think so. I don't think so. We'll talk a little bit more on that as we get into this video. But I don't see how they can do that when you add 339,000 jobs last month. You have a very tight labor market. You have historically low unemployment or historic low unemployment. And you have consumer spending. Yes, they're using credit cards to do it, but the Fed isn't going to look at that. They see the consumer spending, they see a tightening labor market, and there's no way we're getting to 2% inflation unless the Fed stays super aggressive here. So I do believe, let me know your thoughts, comment down below. Is the Fed going to go another 25 basis points next week? I think they are. I could be completely wrong, but right now, from what I'm seeing, I don't think that they can risk not raising rates next week. Here's another one on CNBC. Millionaires are stacking cash, betting on higher rates. CNBC survey finds. Millionaires are adding to their mountains of cash, it says, betting on higher rates and weak stock markets in 2023. Inflation and higher interest rates are starting to affect the spending of the wealthy. 34% of millionaires report keeping more of their money in cash. I think that this is another warning sign that when you see people with a lot of money who are a lot more savvy, a lot more sophisticated, who are paying attention to what's going on, compared to the average consumer who's going to Walmart, running up their credit card, spending money they don't have, still taking vacations, still going out and partying on the weekends, and have absolutely no control. These people have wealth because a lot of them made sacrifices. A lot of them are very savvy, very smart, and have self-control. And so they see something happening here where we still have a lot of consumers who believe everything's going to be okay. The average millionaire sees trouble ahead and they're preparing and they're stacking cash. Here's another warning on CNBC. Treasury Secretary Yellen says she wouldn't be surprised to see more bank consolidation. Ladies and gentlemen, boys and girls, this is code for more bank collapses. She says it's likely for some smaller banks to consolidate. Well, yeah, because they're going under. We're going to see more smaller and regional banks go under. She expects there to be issues in the commercial real estate sector. Well, what a surprise. Where have you been, Miss Yellen? This has been going on for years. It's not going away. And now finally admitting, she was the one years ago that said we would never see an economic downturn in our lifetime. We'd never see a recession again. These people are so wrong, and yet millions and millions of people listen to these people, believe their financial advisors, believe the people in the $3,000 suits on television every day on these financial channels telling you to invest in the markets, buy real estate, run up your credit cards, buy stuff, take a vacation, go buy a new car, spend, 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 spend. That's why so many people are going to lose it all, because they could not stop spending. The same thing that our government is doing, spending money it doesn't have. And this is why America is turning into a third world country. And this is why the average household is going to turn into a third world household, because they cannot stop spending. Here's another one today from CNBC. Used car prices are falling as sales soften amid high interest rates. Wholesale used car prices reached their lowest level of the year this past May. Sales fell amid high interest rates and inflated retail prices. Used retail sales are estimated to be down 11% year over year. And this is a problem. When people are losing jobs, when people don't have discretionary money, when people just can't afford to finance a new vehicle or a used vehicle, you're going to see something give. And what's going to give here are the prices of these vehicles. And this is exactly what we're going to see in housing. Home prices have, home sales have collapsed. Home prices are coming right behind the collapse. They're going to go down. We're going to see prices in many areas collapse, just like sales in these home markets are collapsing right now. Let me repeat. Home sales are collapsing. Home prices are going to follow. If you hear something noisy, it's Nugget over here running around. Another very interesting article today coming from The Hedge. Credit card debt keeps surging even as interest rates hit record high. It says here in the month of April, total consumer credit rose by $23.1 billion to a new record high of $4.86 trillion, up 6.8% year over year. Of this, credit card debt jumped by $13.5 billion. Total credit card debt is now, get this, $1.244 trillion. That is up 13.1% from the previous year. So we are now well over $1 trillion in credit card debt. People think that there's no problem. The economy is doing just fine. 20 million households cannot pay their utility bills. And we now have $1.244 trillion of credit card debt. And we're looking at consumer debt at an all-time record high. Unbelievable. This is really scary stuff, because what happens when the credit runs out? So while people are out maxing out their credit cards, the banks are desperate to load up the peasants with even more debt as they keep handing out credit cards like they were candy, ladies and gentlemen. I cannot tell you how many times in a day that I get an email from credit card companies saying I could raise my credit limits, I need this card, I could get this card, I can get that card, every day. And so you would think that we would see the opposite right now, but it's almost like they're giving people enough rope to literally hang themselves financially. And people are taking the bait. They are taking as much rope as they can get. People, I believe, are either, there's two things that are going on here. People are just going to go out with a massive party and not even care. They're just going to max it all out and just go with the flow. Or people think that their debt is going to be forgiven, that the banks just are going to forgive all this debt, or they're going to go out of business and the debt's just going to disappear. Ladies and gentlemen, put down the Kool-Aid. That is not going to happen. You can go back to any financial collapse we've had in our history. You can go back to the recent one in 2008. Your debt's just not going to go away. It's not going to be forgiven. If the bank goes under, it's going to just be passed over to the bank that takes over the bank that went under. A bank gets consolidated. First Republic went under. Chase took over. Well, guess what? Now you pay Chase. You're going to pay a bigger bank. It's not going to go away. People are believing this pipe dream that they're just going to keep spending and that the system's going to go down, banks are going to go under, and they're just not going to have to pay this back. They're not going to have to make a house payment, that they're just going to get a free house out of this. They're not going to have to make a car payment. Delusional, ladies and gentlemen. Here's another one from The Hedge today. Landlords face a $1.5 trillion bill for interest-only commercial mortgages, which is due within the next 3 years. So I guess that interest rates didn't stay down forever. See, here's the problem. They thought that rates would stay low forever. It didn't happen. Now rates are creeping up, and they're going to keep creeping up. And they thought that property values would keep going up forever also, just like homeowners believed that, rates will stay low forever and property values are going to go up forever. Well, it's all changing now. Now values are coming down in the commercial market. They're beginning to come down in the residential market. And mortgage rates are skyrocketing and commercial rates are skyrocketing. Get this, 83% of securitized office loans are in trouble, according to this article. Park Hotels and Resorts just walked away. We just talked about this. Just walked away from a 1,921 room Hilton Union Square Hotel in San Francisco. They also walked away from Park 85. That was a 1,024 room hotel in San Francisco. The lender was First Republic. Guess what? Now Chase is the new lender. So very interesting here. Think about this. This is a $725 million loan they just walked away from. So who's going to be on the hook now? Well, it looks like it's going to be Chase, bondholders, investors. It's going to get ugly, ladies and gentlemen. Wolfstreet.com, the Bank of Canada unpauses hikes 25 basis points, second central bank to unpause on resurging inflation fears. They paused back in January. That was their last hike. They paused after January. January of this year was their last hike. And they were saying that this will be the last hike, but unfortunately inflation isn't going anywhere. In fact, it's creeping back up. And so what did they have to do? They had to raise rates yet again. That just happened. Here's another one on wolfstreet.com. Reserve Bank of Australia, first central bank to pause, then unpause. So this, to me, just kind of reinforces my belief about what will happen next week. I don't think the Fed is going to make this mistake. I don't think they're going to unpause. I think they're going to keep raising rates. And so looking at Australia, looking at Canada here raising again, I think the Fed's looking at this too, going, we're going to have to do the same thing. We can't make a mistake and unpause or pause, because we're going to have to unpause at some point down the road. We're not near 2%. We cannot pause. We can't afford to pause, because we now have inflation that is entrenched. And if we let off the gas pedal, it's just going to keep growing. So I think they're going to keep the gas pedal down. I think they're going to keep raising rates. I could be wrong. Let me know your thoughts. Comment down below. It's going to be very, very interesting. But a lot of people now believe that the Fed is going to pause next week. So we will see. So I'm going to leave it there today. It does not look good. The health of the U.S. economy looks very, very sick. The health of the global economy, very, very sick. $304 trillion of global debt. Anybody that is telling you that this is a good time to buy a home, this is a good time to make a big ticket purchase, they are out of their minds. And there are people still believing the pipe dream out there that everything is going to be okay, that the Fed is going to come to the rescue. I think the Fed's going to burn it all down. I think the Fed is going to take everything down at this point. I think this is now going to be a very strategic demolition of the economy and of the markets. Again, I could be wrong. Let me know what you think. I don't think the Fed is your friend. I think the Fed now has created a giant mess, and now they're going to have to get extremely aggressive here to get inflation down. Problem is, we've now raised the debt ceiling, and we are spending with an open checkbook here while the Fed's raising rates, spending trillions of dollars while the Fed raises rates. This is going to be catastrophic. I think the Fed really needs to come out and really say something that the government spending has to come to an end. Otherwise, we're just spinning our wheels here trying to fight inflation, and we're destroying the middle class, we're destroying the poor. They have very, very inaccurate data too on top of all this. But we'll see how it goes. I want to check in with everybody. Comment down below about anything you want to comment. Thanks for watching. Thanks for commenting. Thanks for all the support. I wish I had better news, but it looks absolutely horrific out there financially. And we look at the markets today, pretty flat across the board. Markets are waiting for what the Fed is going to do. It's going to get ugly, ladies and gentlemen. It really is. Just talking to some people today, they just have a gut feeling that things are just going to get absolutely out of control. And you need to be preparing for things to get out of control. God bless you all. Have a wonderful day. Hopefully tomorrow we have some better news. God bless.